What's up, guys? In today's video, we're going to talk about, is life insurance a scam? Will it pay out? Will they go bankrupt? And how can they deny my claim? So these are some very common questions that people have. So with that, let's just get right into the video. Before we get into the video, if you are looking for life insurance quotes, you can actually go to affinitylife.ca and get instant term life insurance quotes and apply 100% online. You can get instant quotes without having to put in your name and your email and all that crap. You can just get it right away. So I will put the link in the description below and you guys can check that out. Okay, so when it comes to life insurance and life insurance companies in Canada, I think there's two major concerns that clients have. The first concern is the insurance company going to go out of business? And if they do go out of business, what is going to happen to my life insurance contract? That's the first concern that I think most people have. The second one, which is much more common, is, and there's just a negative stigma around this, it's like, while insurance companies always look for a way to not pay. And I'm gonna get into that as well. So what are the reasons that a life insurance company can deny a claim and potentially not pay out the life insurance proceeds to your beneficiaries if you die? And so in this video, we're gonna go through both those things, so let's go ahead. Okay, so insurance companies going out of business. Is this a possibility? Of course it's a possibility. Will it happen? Probably not. And if it does happen, there's so many safeguards in place that are gonna ensure that you still receive your life insurance contract and the payout if you did die. So let's get into it a little bit. First of all, insurance companies hold billions of dollars of assets in Canada, and that doesn't mean that they can't fail. Other companies that have billions of assets for sure fail. Second, which is a big thing, they're government regulated, meaning that they have to abide by a set of rules and regulations that the government has set out to protect Canadian consumers. So one of the things that you want to look at with an insurance company is what their capital reserve is. And essentially what capital reserve means is how many assets do they have compared to liabilities. And liabilities for an insurance company is essentially how many life insurance payouts will they have to make. So how many people are gonna die in any given year. And now, on average in Canada, the average insurance company has 240% assets compared to liabilities, meaning that they hold quite a large capital reserve in Canada. They have plenty of cash on hand to pay out lots of payouts if worst case scenarios were to happen and maybe something like a pandemic came through or some type of natural disaster or something else that caused a lot of people to pass away, and they would have to pay out a lot of different life insurance claims. So 240% is the average for insurance companies in Canada. Some have more, some have less, but that's the average in Canada, and that's a really good number. Another thing that protects insurance companies is something called reinsurance companies. And reinsurance companies, I don't want to get too complicated. Essentially, these are larger insurance companies that insurance companies go to cover a portion of their liabilities in exchange for a fee. So you can kind of think of it like an insurance company for an insurance company. So again, if things were to happen, a lot of these policies in Canada are backed by reinsurance companies, so there's just an added layer of protection, okay? And the third thing and the final thing that protects Canadians from insurance companies that might go bankrupt or become insolvent is something known as a SURIS. So a SURIS is a Canadian non-for-profit that essentially protects Canadians in the event that one of these insurance companies would go bankrupt, okay? If for some reason something happened and in Canada an insurance company did go bankrupt, a SURIS would step in and they would take over the liabilities and the obligations of that insurance company, okay? So if you had a life insurance contract and let's say that it was $500,000, this is how it works. A SURIS will cover up to 100% of the face amount, up to $200,000. After $200,000, they'll cover 85% of that. So yeah, that's not that much of a concern in Canada. Maybe in other countries, I'm not very sure, but definitely in Canada, the possibility of an insurance company going bankrupt and you not being able to get your claim paid to your beneficiaries is incredibly low. There's so many added layers of protection. There's reinsurance companies, there's a SURIS, it's government regulated, they hold billions in assets, they have a large capital reserve. That's not gonna happen. You guys can believe in that. Okay, let's get on to the second part. And this is, I would say, probably the biggest question that Canadians have. Can my claim be denied? how is the insurance company going to try and find a way to not pay my claim and not pay this out to my beneficiaries? And you've probably read stories in the paper or online or articles. Now, some of them are about insurance companies, and this is, I would say, more few and far between. And some of them are about a different kind of insurance called mortgage insurance. Mortgage insurance and life insurance are two completely different things. And I made another video about mortgage insurance and I'll put it there. But a lot of the times when you hear about claims being denied, they're typically gonna be from a mortgage life insurance product or a mortgage insurance product and not necessarily life insurance. But with that all being said, insurance claims can still be denied, and I'll go through a couple reasons right now, okay? So let's talk about something in the insurance industry known as a contestability period, okay? So the contestability period, this is the easiest way to think about it. When you first apply for your policy and you go through the application and you answer all the questions, you put everything down, the insurance company has 2 years in Canada, 2 years. That's the most of the contestability clauses in Canada are 2 years. They have 2 years to look through this policy and contest it. So what does that mean, contested? It means they can look at and see if there's any intentional information left out, or maybe it was misintentional, meaning that they asked you a question, you didn't really understand it, you answered to the best of your ability, but when they looked into maybe doctor reports or they pulled information from the MIB or other different sources, their answer was different from your answer. So in that 2-year period, whether you die or not, the insurance company has the ability to contest it. So they can contest it if you're still alive, but if you die, they still have the ability to contest it. So within that 2-year period, that's essentially when the insurance company can look through and just to make sure there's no misstatements in it, they make sure you answered it correctly, you didn't lie in it, there's nothing left out, there's no purposeful omissions. You know, they asked you a question and maybe you knew there was something that you should put in there, but you left it out because you thought, maybe it'll be better if I just left it out, and they didn't know anything about that. That's an intentional omission, so you don't want to do that, okay? So in that 2-year period, the insurance company has the ability to contest it, meaning that if you don't die, they can contest it, and maybe they can come back and say, this wasn't filled out correctly. We're either going to revoke your insurance or we're going to increase your premiums based on the information that we now have, okay? Or if you die within that 2-year period and something was answered incorrectly, you left something out, there was omission, they can then deny that claim. Now, this is where it gets a little bit complicated, okay? After that 2-year period, what happens then? Well, this is a little bit complicated, okay? After the 2-year period, at that point, the only reason that they can deny the claim is for intentional fraud. And now the difficulty with that for the insurance company is kind of twofold. Number one, they're only really going to take on cases that 100,000% they know they're going to win, okay? So even if you did lie, and I'm not telling you to lie, okay? But even if you did lie 5-10 years down the road, you died, and you left out this part of the insurance application, you said it, you were never tested for it, and you were tested for it, they would want concrete proof. They're not going to take on a case against denying a claim unless they have solid concrete proof, and they know beyond a shadow of the doubt that they're going to be able to win this case of fraud. Another thing that they're a little bit leery of is, depending on what the face amount is, maybe they don't even want to take it to court. Now, why would they not want to take it to court? Even if they knew that you lied on the application and they said, he lied, we could get this in court, but it's $200,000 face amount, okay? They might say, instead of tarnishing our reputation, because every time an insurance company takes a client, essentially, to court and tries to deny their claim, that's going to get picked up by all the news stations across Canada. It's going to be all over Google. It's going to be all over the internet. It's going to be on Facebook. And so the negative reputation that they're going to get from that, is it worth denying that claim? And it's all on a case-by-case basis. So I'm not telling you to lie on your application. I'm just saying after that 2-year period, it starts to get a little bit murky what the insurance company is going to do. But suffice to say, they would need a rock-solid 100% fraud case, and it would really need to be a large face amount, in my opinion, for them to try and pursue the matter. Now, I'm not saying that means you should try and lie on your application and wait 2 years. That's not what I'm saying. I'm just trying to provide you the details in this video. Now, a few other reasons why they might not pay a claim, okay, is suicide within the first 2 years. So if you commit suicide in the first 2 years of your policy, they will deny that claim. However, after those 2 years, if you did commit suicide, the claim would be paid out and your beneficiaries would receive that face amount. Another kind of fun quirk rule that I don't know if it's fun, but it's a little rule that the insurance companies have, something called the Slayer rule. And the Slayer rule is essentially if a beneficiary kills the life insured to try and receive the proceeds of the life insurance, they're not gonna pay that out. So if you're a husband or a wife and you're the beneficiary of a policy and you murder your spouse, they're not gonna pay out that life insurance, okay? So don't do that. Don't do that anyways, but don't do that. You're not gonna get the life insurance. A couple other reasons that it might not pay out, actually just one more reason, is of course if you don't pay your premium, okay? So if you miss payments, your policy will go into what's known as lapse. So you'll have this lapse grace period. Most insurance companies in Canada are 30 to 60 days, meaning that if March 15th, you missed a payment, then you're gonna have till April or May 15th to repay that payment. And if you did die in that window, that grace window, the face amount would still be paid out. However, after that, your policy would become lapsed and you would need to reinstate it. So what can you do to make sure that your face amount will get paid out to your beneficiaries and the life insurance will not be denied? Couple things here real quick. Be honest on your application. You don't want to have any gray area of will this pay out or will this not pay out. So be honest on your life insurance application and read the questions carefully. Read them and make sure you understand them. And if you don't understand them, make sure that you reach out to whoever you're applying for your life insurance with and say, hey, I don't understand this question. Can you elaborate a little more? Exactly what does it mean? And just make sure you're answering it to the best of your ability. And of course, pay your premium on time. That's a big one. That's with anything. Pay your premium on time and you'll never be concerned about whether life insurance will pay out or not. I hope you guys enjoyed this video. If you guys are enjoying this content, all I ask is to give it a thumbs up and I'll see you guys in the next video.